Hello ladies and gentlemen, and welcome to today's morning market. My name's Chris Leyland and I'm Director of Investment Strategy here at True Potential. So what I want to do today is just really talk you through some of the key events and data points for the upcoming week. So firstly, the minutes of the Federal Reserve's recent meeting are out on Wednesday. So the recent Federal Reserve rate meeting saw the US Central Bank keep monetary policy unchanged, keeping a level of bond buying at $120 billion a month. The Fed did acknowledge that the economy had made progress towards the goals need to look at tapering, but there was still some way to go. The decision was unanimous. It's clear from recent comments from the likes of permanent board members Christopher Waller, as well as Vice Chair Richard Clarida, that the Fed is much nearer to tapering now than it has been for some time, and that could come as soon as October, jobs data permitting. Sticking with the US, we've also got US retail sales, so released tomorrow. US retail sales have been quite difficult to predict this year, up 1 month and down the next. Consumer spending was expected to decline by -0.5% in June, but rebounded strongly by 0.6%. On the plus side, the jobs market appears to be recovering strongly, with 2 million people returning to the workforce in June and July. There's little doubt that US consumer spending has been supported by the two fiscal packages that were delivered in January and March, and continue to be so, although an improving economy is helping to push consumer confidence back to levels last seen pre-pandemic. Okay, moving over the Atlantic to the UK, and we have UK unemployment figures for June released tomorrow. So the picture for UK unemployment has been improving quickly over the last few months, a trend that has been no better illustrated than with the sharp decline seen in the claimant count rate since March. So at March it was 7.2%. Since then, if we take the figures at June, it's now 5.8%. For now, the outlook continues to remain positive, despite the 1 month delay to a full reopening. The outlook for unemployment continues to look more positive than negative as we move into the school summer holiday season. However, we do need to prepare for a move back higher as furlough measures start to unwind. And then finally for me, just UK CPI and retail sales, so UK inflation and retail sales. So they're released Wednesday and Friday. So there appears to be an increasing prospect that UK CPI could well head towards 4% by the end of the year, if the Bank of England is to be believed. Although most of the Monetary Policy Committee members appear to think that inflation will be temporary in nature. UK CPI is already well north of the bank's 2% target at 2.5%, which means we look to see further increases in the coming months. This week's UK CPI numbers for July are expected to see a slight fall to 2.3%, although they could just as easily move higher, probably driven by the delayed economic reopening that was deferred from June. A lot of retailers will have probably nudged prices higher as they look to claw back lost revenue from the various lockdowns, and this could well hinder retail sales growth in July, which has been patchy in the last month or so. In May, we saw a decline of -1.3%. Well, you've got to remember this did come off the back of 3 successive monthly gains. We got a slightly better feel for spending in June with a rise of 0.5%, while other retail sales surveys point to resilience in patches and weakness in other areas. With the school holidays starting in July and people being encouraged to holiday at home, the delay in lifting travel restrictions could also act as a boost as more people book a domestic break instead. So you've got expectations there of a rise in UK retail sales of 0.4%. Okay, that's everything from me. Hope you enjoyed today's morning market, and I look forward to speaking to you soon. Thank you very much.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.